Hello everybody, Shaf Rasul here and welcome to today's episode of Ask Shaf Live. Now, if this is the first time you've been to my channel, let me tell you a little bit about myself. I'm a serial entrepreneur, I'm a columnist for a national newspaper, and I'm a former dragon on BBC Dragon's Den. What I try and do in this series is I try and answer my viewers' questions on property, business, entrepreneurship, personal finance. If you've got any questions, please stick them in the comments below, and today I'm going to answer questions from a previous video. So let's go. First question, Andre Compton. What is the best way to sell an idea or a way of business to a business? I've done a fair amount of market research, strongly believe I have a good plan, but no track record, no money to invest, and no network. Well, Andre, first thing is, everybody starts off with no track record, so don't worry about that. No money to invest. I don't think you need a lot of money. I suggest this to all of my students that I mentor. Go around your house, so go into your loft, go into your garage, and there's going to be loads of stuff that you don't use. Absolutely masses of stuff. Get it listed on eBay, get it listed on Gumtree, get it sold, get the cash in and use that as your seed funding. Okay, I read a report somewhere that the average house has about £1,600 worth of junk. So what you want to do is find this junk, okay? You want to cash it in and use that. As regards building your network, go into LinkedIn, build your professional network, connect to people that you think might find your service useful or your idea useful. Once you've done that, you need to get an NDA and get them to sign the NDA and have a chat about your idea. There you go. Guy Mather, small contribution to add. If you buy your own home, take a look at the government's rent-a-room scheme. It's tax-free up to £7,500. Guy, that is a good point. I have actually mentioned that in previous videos I've done, but it's a really, really good, valid point. And I find it really good that my viewers are actually jumping on and giving advice as well. I think that's really, really good, guys, because I think what we're starting to do is we're starting to build up a little bit of a community. So I think that's really cool. Daniel Oaken, Shaf, great content. I'd like some feedback on a situation of mine's. I bought my first house, intent on renovating it and renting it out, or maybe selling it. Purchase price was 104,000, renovation is 8,000, it's worth 135 to 140. Third option would be to live in it. Really looking forward to some feedback. Well, Daniel, first bit of feedback I'll give you is, I'm assuming those valuations are historical because we're in the middle of a pandemic. We've got no idea what it's going to be worth when we come out of the other end. Prices are all over the place and the market is going down. We just don't know how much it's going down by. So what I would do is I would carry on with your renovations, and at least you've got a plan B, a get out of jail card. You can just move into the property, and basically the advantage of that is any capital gain you have will be tax-free. Scrappy Karate Kid. This is a question about council planning permission. In a very busy terrace housing area, I bought a corner property which has an outhouse. I knew I could add value by converting the outhouse into a livable area. I've requested for planning permission to make it livable, which got granted. I've asked for a flat roof replacing the pitched roof, as this would give more area to the property without raising the height, which they have declined as it will not fit the look in the area. I was advised, accept this for now and reapply for planning permission as I might get a different evaluator who may allow it. What would you do? Do you have any experience? The first thing is, I haven't seen the property, so I can't give you any meaningful advice, but I can talk in general terms. If you've been given advice by your architect who's an expert in the local area, and he is saying, yeah, this is what you need to do. You need to just reapply at some point in the future. Take that on board because he is an expert in the local area. Now, I've had a situation like this in the past where we've applied for planning permission, it's been turned down, and then we've reapplied later on and it has been granted. So what I would do is, if it's your architect or a planning consultant that's giving you this advice, take it. You may want a second opinion, ask a second architect. It's not going to cost you anything for you to have a meeting with an architect and get his opinion. Kenny, I'm looking to buy my first property. Any tips and advice you'd give me? I'm 26 and have savings. Also looking to start my property portfolio. Any gold mine areas in Scotland? When it comes to residential property, I've invested exclusively in Edinburgh. The capital growth I've had has been absolutely phenomenal. Sorry, let me qualify that last statement. When it comes to residential property that I want to keep, I've invested mainly in Edinburgh. I'm buying a portfolio and I want to break it up and sell it on. I'll do that anywhere in Scotland. If it's something I want to keep, I want to do it in Edinburgh because the capital growth has been phenomenal. Now, in terms of property that we want to keep, even with commercial property, I tend to basically invest in Scotland because it's an area I know. I know it like the back of my hand. That is the advice I would give you as well. A lot of my friends that are property investors only invest in certain areas as well. So I think this is a common trait amongst successful property entrepreneurs. Find a patch and stick to it and mine it. Burning desire to build wealth. Do you prefer to invest in properties focusing on capital gains, or do you prefer ones which go up in value but give you a good cash flow? Burning desire, we do a combination of both. So we have what we call our core portfolio. Our core portfolio comprises of an investments that just provide us solid income. So we've got a residential portfolio that's just long-term holds. It just provides us with income. End of story. A commercial portfolio, we have a number of vehicles that we use. We have a core portfolio which generates us good, stable, long-term income. Then we have what I call my trading portfolio. So these are properties that I've bought when I want to add value to them, and then either I want to transfer them into my core portfolio and hang on to them, or I want to move them on for a profit. So it's a combination of both we do. And that is the advice I would give somebody as well. Have a core portfolio, provides you with stable income, which will cover your overheads, it'll repay your bank debt, give you some surplus cash. Then have a trading portfolio, a play fund, which you can add value to. So there's my advice. Scrappy Karate Kid. Being a startup company, creating a physical product, it needs feedback from people such as investors, customers, potential suppliers, and the only way to protect the intellectual property is by them signing up to an NDA. As a startup company with very little finance, if this was a breach of confidentiality, as far as them copying your idea, what can you do? Have you had any experience in this? Yeah, I get offered loads of investment opportunities. I'm forever signing NDAs. If you guys need a template for a good NDA, stick it in the comments below and I'll basically stick it up and you can download it. Now, once somebody's signed an NDA, they steal your idea, literally you can sue them. You might go, well, I don't actually have the money to sue them, but if you can demonstrate basically that somebody has stolen your idea after signing an NDA, there will be umpteen people that will fund your legal action or umpteen lawyers that'll do it on a no-win, no-fee basis, so I wouldn't worry about it. Burning desire. When looking at commercial property that is vacant, how can I tell if we will be able to find tenants easily? Also, what is usually the LTV on them? If they are vacant, are they usually easier to negotiate, and will I have to pay rates if you don't get anybody in? I won't look at warehouses because they can cost millions. Okay, so there's a number of questions. How can you tell if you can get tenants easily? When I look at a property, I've done deals previously in that area because, as I've said in a previous question just a few minutes ago, I know the area really, really well. There's been times where I've gone, I wonder if I'll get tenants for this sort of property. There was one time when I was doing development and I wanted to get some feedback on it, and I created a spoof video. That's it coming up on your screen now. So I created a spoof video, I chucked it on my LinkedIn, I had 15,000 views, and on the back of that, I had circa 90 letting inquiries. So as soon as the letting inquiries came in, I knew that we would be able to let these units. So we went ahead and we applied for the planning permission. So that's, really research, try and think out the box how you can do the research. And also, what is usually the LTV on them? If you're getting into commercial property the first time, you don't have a track record, the bank is going to look for it, in most instances, of an LTV of about 50%. That's tier one lenders. They're going to look for 50%. It might be 40%, but I suspect it'll be 50. But once you build up a track record, that will improve. Our own personal LTV, it fluctuates anything between 48% and 65%. I believe it's currently sitting at about 48%, but our own LTV just fluctuates all the time. If they're vacant, are they usually easier to negotiate? Yes, if they're vacant, they usually are easier to negotiate because the landlord is paying vacant rates. And remember, if they are vacant, you can add value to them. You may need to spend money refurbishing them, etc., bringing them up to standard. That's called asset management. But I've got some videos in my Get Real Estate series on some of the asset management strategies we have, so have a look there. Will I have to pay rates if I don't get anybody in? Yes, you will have to get rates if you don't get anybody in. There's absolutely no doubt about that. Unless it's a listed building, there's no rates in listed buildings. And finally, I won't look at warehouses because they cost millions. Well, you'll be pleasantly surprised at how cheap warehouses can be because, as I've said, it's a liability to people. One of the best strategies that I've adopted over time is basically buying a big massive warehouse, chopping it up into smaller units, and the amount of rent you can charge per square foot goes up. And that's a really, really good strategy. Adam Stafford. Hi Shaf, I'm interested to know if you needed to apply for change of use for the Ghost Kitchens venture and how will you deal with the additional requirements, i.e. hygiene, certificates, ventilation, etc. Adam, yes, we did apply for change of use, As regards all the other issues you've mentioned, do you know what we'll do? We will simply get an experts to deal with it for us. That's what successful people do. They get other people in just to help them. So that's what we will do. In terms of our ghost kitchen venture, what I'm going to do is I'm going to do a series of videos showing you guys how the venture all pans out, etc. You'll be able to see behind the scenes stuff, the fit out getting done, us finding tenants. You'll even be able to see the tenants in operation. You'll see some of the problems. So please do subscribe to the channel. It'll be coming up very, very soon. As soon as we get out of this lockdown, we'll start filming content for that. Micah D, can I ask you what percent as a general rule of thumb you use as capital versus leverage? I never ever go above 65% borrowings, but I prefer to keep it even lower, so that's my personal view. Jet Up, hi, this is a follow-up comment from the one in your video about ghost kitchens. Can you please tell us about how to calculate costs and product pricing? What is a good margin to aim for? Jet Up, we are basically the landlords, so we are going to be running and operating the ghost kitchens, so our tenants will be dealing with the costs and the product pricing. But look, if you want me to, I can ask one of our tenants basically to shoot a video. In fact, as I've already previously mentioned, we're going to sort of document the whole journey, and that is one of the questions we can ask our tenants or when we get around to filming it. So please do subscribe to the channel and watch the updates on our cloud kitchens venture. DD, I've got money saved up over the years and I'm currently renting, looking to buy my first after the pandemic is over. Please advise, as I'm currently thinking maybe I'll do this virtual kitchen thing in London. DD, I'm not sure if you're talking about being a landlord or if you're going to rent a virtual kitchen to start a restaurant. It's not quite clear from what you're saying there. If you're going to start a restaurant, what I would do is advise you to watch my YouTube channel just so you can see how some of our tenants are getting on. If you're going to set up your own virtual kitchen as a landlord, what I would suggest you do is watch some of the videos on my YouTube channel so you can see some of the problems we encounter and how we deal with them, because at this stage I don't even know what problems we're going to encounter. Sneaky Minion, hi Shaf, my name's Jay, I'm a property investor. I wanted to ask you if the following is possible. Purchased an off-plan new build apartment in Liverpool. However, due to delays, it's been delayed 1.5 years. Fortunately, it's gone up in value. When I get round to applying for a mortgage, could I release equity upon it from completion due to the increase of capital for another buy-to-let investment? Jay, in theory you can. In practice, you might find it a bit difficult because when a recession comes, the first properties to go down in value are new build flats. So I don't know how this will affect your development. It's just a case of suck it and see. So you're just going to have to wait and see what the valuation is once this pandemic ends and the property's handed over to you. Keen Noon, hey Shaf, how risky would it be to starting a property portfolio? My biggest fear on ever getting started is that everything will go wrong and I'll lose all my money, assets, credit score and reputation. How can you protect yourself once you can afford to start thinking about buying your first property? Keen, what you have to do is buy your property into a limited company. If you own the property personally, you have problems, it's you that suffers, so it's your personal credit score that gets affected, etc. Now, if you have the property in a limited company, and you have problems, and let's say the limited company has to close down, the limited company goes into administration, it doesn't affect you personally. The only way it would affect you personally is basically if you have a personal guarantee guaranteeing the obligations of the limited company, and that's always a really bad idea, given personal guarantees. Try and avoid them. In terms of how can you basically mitigate risk, just by basically educating yourself. If there's something you're unsure of, just ask, just stick it in my comments and I'll try and answer your question. But you need to mitigate your risk, get good professional advisors to advise you all the time. Just the general things that I preach in my videos. That's what you need to do. Craig Rusconi, hi Shaf, great video again. I'm in the process of purchasing a property, but as you've said, we could go into a recession. Should I reconsider my offer? Craig, I talked about this in my last video. In terms of properties we've buying, we have turned around to basically the vendors and said, look guys, we want to see what happens once the pandemic's over. If the pandemic's over and the property prices have come down 20%, our offer will be certainly going down by at least 20%. So what I would potentially do is either I would put the purchase on hold until the pandemic's over and you've got a better idea of the market. Alternatively, you could try right now to reduce the price. I mean, what have you got to lose? I've covered this in my previous video, episode 4, so go and have a look, please. The same advice applies to this situation. Goyan, is mentoring available from you? Goyan, I've covered this in previous episodes. I don't really do mentoring unless you regard me answering your questions on YouTube as mentoring. I mentor a couple of people. I don't have time to mentor anymore. I've never charged for mentoring and I'll never charge for mentoring. But in episode 3, I've covered mentoring, so go and have a look at that, please. Thank you. NTY100, another great vid, Shaf. I was wondering, is it worth trying to set up a ghost kitchen on a small scale, and how would you recommend sorting out finance for it? Would you rent a commercial property or attempt to buy it? It depends on your budget. It depends on how much money you've got to invest. If you can afford to buy it, you can get a bank loan to buy the building. That's great. So what you would do, you set up a propco. So a propco is your property company. That would buy the building. Then you set up an opco to run it. So what you would do is your propco would rent it to the operating company. You would put a lease in place. So that will increase the investment value of the building anyway. That's the first thing you would do. So in terms of sorting out finance, you haven't given me enough information for me to answer that question. And would you rent a commercial property, attempt to buy it? I've just covered that. Hi Shaf, really appreciate your ethos. I wonder why so many alleged property moguls feel the need to hard sell courses. It's puzzling to me. It's not puzzling to me, it's because they're not property entrepreneurs. If you pull their accounts, you will see that they generate the bulk of their income from education, not from property investment or development. So that's why they need to sell courses, because that's their job. They're educators. Ryan Lewis, in regards to no money down, some of these property educators claim to teach raising finance, which is one of their no money down strategies. Do you know of any property entrepreneurs that have done a significant amount of deals using banks' investors' capital? Ryan, most of the property, in fact, Ryan, just about every property entrepreneur I know has used the bank's money to grow their property portfolio. It's called leverage, but the bank will want you to put something in. So the bank will want you to put 30% in, 25% in, 50% in some circumstances, depending on the level of risk in that particular deal. So yeah, I do know people, the strategies that the property gurus teach, I mean, they're just nonsense. They're like, oh yeah, you go and find somebody that's got a pile of cash and you can put your knowledge in. Okay, that's just nonsense. I mean, do you think there's groups of people sitting out there that have got 100 grand cash, but they've got no knowledge? That's just a way of selling courses. But yes, you can use the bank's money, but you will need to put some money in yourself. You can't really do it with you putting no money in. The other thing you might have to do if you genuinely have no money is you can give the bank security over a different property, and then you basically don't have to put any money in. So, example, you're buying a building for £50,000, take a security on my home, and the bank will do that. Or I have a second building which has no borrowings on it. I will basically give you that building as security for the £25,000. So that's the other way you can do it. DSDL Investments Limited. I know you briefly went over how hard it is to get a commercial mortgage, but what would I need up front and what hurdles would I have to go through, or should I stick to residential? DSDL, in my opinion, commercial property is how significant wealth is generated. All these property gurus talk about, oh yes, all the wealthiest people on the Sunday Times rich list, they all do property. They do, but the vast majority of them basically do commercial property. To do commercial property, it's a bit tricky, right? Because you've got to have a bit of knowledge. New entrants into the market, the amount of money they need to put in, the LTV is quite high. But once you develop a track record, the LTV drops down. First ever commercial deal I did, I had an LTV of 50. It's reduced as time has gone by. So it's very simple. Get to know the market, network with experts in commercial property, self-educate yourself, do your first deal, make sure it's a small deal, then build up, do a bigger deal, then another, and then just build up a track record. And that's it, you're on your way. Jim Blacker, Shaf, you've shared stories of your successful deals. Can you tell us about some ventures that didn't go the way you'd hoped? Jim, I did that in last week's episode. I talked about a townhouse that I bought. I've also done a video on a deal I did on an industrial estate. That's the thumbnail coming up on your screen, but I'll try and do some more in the future. So if I have any bad deals, I'll document them. In fact, I'm doing an Ask Shaf Live special on a deal which I bought. I'm talking through how I bought it, what we did to asset manage it, how we had the deal all lined up for a sale, but then the pandemic quashed that. So that's an Ask Shaf Live special. You really need to check that out, because you'll be able to see some of the stuff I talk about in these Ask Shaf questions applied in real life. Remember, hit the subscribe button, notification bell, and you'll be informed the moment it goes live. Michael Jackman is having problems finding a good solicitor. So Michael, if you're based in Scotland, connect to me on LinkedIn and I'll introduce you to loads of solicitors in Scotland. When it comes to solicitors, I think you're better off going to a specialist property solicitor from a reasonably large national firm, because they have an expertise in property and they will just get the deal done super fast. We use a firm called Gilson Gray, and they have specialist commercial property lawyers, residential property lawyers, banking lawyers, property litigation lawyers. As I said, if you're based in Scotland, connect to me on LinkedIn and I'll introduce you to some lawyers, not a problem at all. Hi Shaf, if you're earning £30,000 a year in engineering, do you think that's a good amount of money to be able to live and save up to start investing in property, or even looking at starting a business? Brandon, absolutely. You just need to start saving. You need to start teaching yourself about business. You need to start teaching yourself about due diligence on deals, because if you can do due diligence on a deal, you can basically put all the rubbishy deals to one side and you're left over with ones that have a higher chance of working. And it depends on what percentage of that money you save. If you're saving £50 a year, obviously that's not a good amount of money to start a business. But if you're saving a meaningful amount, yes. Retro Gamer. I found a house for sale that needs some work done to it for 200,000. However, it's in a 300 to 400,000 neighbourhood. I've costed out the renovations at 30,000 and the deposit is 20,000, which I have. I plan to live in the place while doing renovations and then renting out later a year or so down the track. My plan is to build equity into the property and try and pay off as much of the mortgage as I can while interest rates are super low. I would have to put in £50,000 deposit and reservation, about £25,000 a year cost in extra mortgage repayments. After a year or so, I hope the value of the house would be around 350. Is it an okay deal for a beginner? I think you've got a really, really good plan, assuming you've done your due diligence, you've got proper quotes, etc. The work's done to a good standard. I think it's a great plan. The only thing you need to bear in mind is if you move out of the property, it no longer becomes your primary home, which means if you do sell it to crystallise the profits, you have to pay tax. You may well, once the value's gone up to £350,000, release some equity out of that and buy a second property, but that's a decision you have to make closer to the time. But looking at the strategy, yeah, looks good to me. I don't see any problems with it, assuming you've done your due diligence, you've done the groundwork, you've had professional advice through the process. Yep, no problems at all. Danny Murphy, Shaf, have you ever converted offices to residential? Or would that be a deal you would sell on before work starts? I have done some deals in the past where we've converted offices into residential, but you've got to remember, in Edinburgh, a lot of the offices are in townhouses, which were originally homes for people, so it's not as difficult as it sounds. You know, all you're doing is you're changing it back to what it used to be. Evelina Mikkel. Hi Shaf, what do you think about the Dundee residential market? I was thinking about moving to Dundee and start investing there in residential property in the future. I've done some research on my own there in the last 2 years, but would love to see a professional point of view about this market from someone so experienced as you. Evelina, in the last recession, the prices in Dundee fell by so much money, my head was spinning. But in the last few years, Dundee's changed so much. I have a friend that's a house builder in Dundee, and he probably builds 300 houses a year in Dundee. I'll get him in for an interview and we'll ask him what he thinks. I've very, very recently done a commercial property deal in Dundee. We've just offered on 2 properties in Dundee town centre that struck me as really good value. Now, because of the pandemic, we've put them on hold. We're not going to decide until after the pandemic. So yes, I would invest in Dundee at the moment, but I've always got in the back of my mind, okay, what happened in the last recession. 2 field names. Please invest in a good mic. Mate, I've invested in a good mic and a camera. Look, I'm just going to photograph it, right? I'm just going to photograph it and I'm basically going to put it on this screen so you can see that I've invested in a good mic and a good camera. Done. There you go. Hakeem Vlogs. Hi Shaf, would I be liable if a tenant ends up building up a huge debt with the electric or gas company and ends up doing a runner? Hakeem Vlogs, when you basically rent a property, it's documented. So assuming it's documented and basically the utility suppliers, you should be notifying them that this is my tenant. So this happens in a load of instances. So just to give you an analogy, basically when a big retailer closes down, it's not the landlord that's responsible for the utility bills or anything like that. It's the retailer, it's the tenant that's responsible. So as long as you've got it fully documented, it's not your problem. Don't worry about it. Simon Kane. I've been saving for a decade and had some grandparents die recently. I'm about to buy my first rental with a view to building a small property portfolio. I was wondering if it's a good time to be a landlord. I know the government has got rid of a lot of perks for landlords and people have told me that Labour are likely to get in the next election and they'll clamp down even more on landlords. What are your thoughts? Simon, I'm sorry to hear about your grandparents, but my personal opinion is the next 2 or 3 years is going to be a phenomenal period to invest in property because we are going to have a recession. Market prices are going to come down. There's going to be plenty of opportunity to buy property cheap. There's going to be loads of opportunities to repurpose property, to split it up, change the use. The way that we operate is changing and landlords need to be aware of that. So I think this is a great time to invest in property. Simon, what I would do is form a limited company. That will protect your personal position and from a tax point of view. But no, my advice is get on with it. Rizwan, can I call you back? I'm just shooting a vlog. Alright, I'll call you back. Alright. Josh Mather, hi Shaf, I want to start a recruitment agency but I've no experience in the industry. How should I go about starting? Josh, there's a guy on LinkedIn that basically is connected to me and he has documented his whole journey of starting his recruitment business on video. What I'll do is I'll post these details in the comments below. Watch his videos and that should give you a good head start. FS Shiz, great video again with questions. What FS Shiz is asking, if another recession hits and you can afford to pay the mortgage, you'll be okay. Or does that mean the banks can snatch the house back off you even if you're paying the buy-to-let mortgage? How a bank basically values risk is the amount of money you've got in a deal. If the value of the property comes down and you've got no money in the deal, or you don't have the 25% that's specified in your contract, they have a number of options available to them. One of the options is they can take the property back. The other option is they can sell your loan. Now, what happened in the last recession was RBS sold off all of their bad loans and they sold them to a company called Cerberus. So Cerberus bought these bad loans. This is too long a story for me to get into basically in this video, but what I'm going to do is I'm going to post a link for it. But yes, if the amount of equity you have got in your property goes down because of the valuation coming down, the bank has a number of options because you'll have breached what's called a covenant. The options include 1, basically repossessing your property, 2, charging you a default interest rate. So if your interest rate is 2%, they can put it up to 5 because you breached your covenant. And until you fix that covenant, they'll charge you a higher interest rate because their risk has gone up. Or 3, they can sell the loan. So there's an article below. Have a look at it. If you have any more questions, just please post them up. Jay, hi Shaf, myself and a friend are looking at investing in property. What would be the best thing for us to purchase our first property? Either finance the whole thing ourselves or go to the bank for help. Jay, if you're saying to me you've got enough cash to go and buy your first property cash, I would buy your first property cash. Add value to it. So if you buy your property for £100,000, you add £20,000 in value to it, and then you say, I want an LTV of 50. Basically, you're borrowing £60,000. But in the long term, you always want to have some form of leverage in your portfolio. That's you using leverage to increase your wealth. But I think from reading between the lines, I think you've got enough money to buy your first property for cash. Just do that. And at any point you can borrow against that property. Obviously, the other advantage you have of buying your property for cash is often you can go and do deals where you say, I'm a cash buyer, and you might be able to buy the property cheaper, especially now that there's a recession coming up. Yeah, so I've done this in the past. I'm selling property and somebody offers me £1 million cash, or somebody else is offering me £1,025,000 and they need to get bank borrowing. I will always go for the £1 million cash as long as they provide me with proof of funds. So you may get yourself a discount, and at any point, remember, you can borrow against that property. Colin CL, hi Shaf, great videos, great speech, but don't agree with you telling people with 10k you can always buy to let mortgage options. 10k should be enough as a 25% deposit on some houses or flats. Yeah, so if somebody's got £10,000, what you're suggesting is that they buy a property using that as a 25% deposit on a buy-to-let for something that's worth £40,000. Well, it can't even be worth £40,000 because they're going to have costs. They'll need to spend money on legal fees. They'll need to spend potentially money on fixing the property. So in my opinion, £10,000 isn't enough. But listen, everybody has their own opinion. And this is just my opinion. I don't think £10,000 is enough. But you've put forward a valid argument and I respect you for that. So thank you for just leaving the comment. Hi Shaf, another great video. I'm looking to start my property portfolio through a limited company and I'm in two minds whether to get an accountant full-time or whether just to have a couple of consultancies through the year, which would involve them filling in my end-of-year tax returns. What would you recommend? My financial director is part-time. We have 2 accountants in-house, but my FD is part-time. I would recommend that you have a part-time accountant, but I would get him to do more than just perhaps basically do your tax return at the end of the year, unless of course because you just want a financial picture of your business all the time. So perhaps you want him to come in once a quarter, so that's 4 times a year. That's what my suggestion would be. Rishi Patel, I have one buy-to-let residential in my own name. It makes a good profit, but taxes are highest in my own name. Do you recommend buying residential or commercial properties through a limited company? Absolutely, 100%. Always buy them through a limited company. Lynn's Joy, hi Shaf, what are your thoughts on gearing ratios for a property portfolio? You talk about a house of cards, but what do you consider as a safe percentage? 50-50? Also, if you had a strong long-term tenant, would you be tempted to lease more equity on that unit as opposed to on a shorter, riskier term tenant? Lastly, do you use more equity in a strong market on its way up and maybe repay the loan back to a comfortable level allowing you to expand safely. I've already in this video covered gearing ratios that we personally have. Would I be tempted to release me on a unit basically with a good tenant? Yeah, if I had Google as a tenant, yeah, I would take as much equity out of that property as I possibly could. Do you use more equity in a strong market on its way up and maybe repay the loan back to a comfortable level? That's what I've done in the past, and I will be doing that in the future as well. So I take my equity to a maximum of 65% LTV and then I just bring it back down. So I do that all the time. Reese Nibs, would you recommend a residential mortgage? Because you can still rent the rooms out as long as you're living there as well. As long as you're living in the property, buy it on a residential mortgage because that is going to be the cheapest option for you. And you can rent the rooms out and a percentage, £7,500, as mentioned earlier in this video, it's going to be tax-free. Harry Ratcliffe, just wanted to ask for a 17-year-old like myself, what do you recommend is a good way to make some money alongside my job whilst also at college? Harry, basically you're looking for a side hustle. Well, I'll tell you who I've got. I've got Adam Pye coming in. Adam Pye's the managing director of John Pye Asset Management. So he's going to be one of my guest question answerers, so to speak. John Pye Asset Management basically manage assets for people that need to liquidate or companies that need to liquidate them. So they manage stock assets, they manage property assets. People I know buy stock from these companies and then sell it on. So that's, so we'll speak to Adam about some of his clients that do Amazon as a side hustle or do eBay as a side hustle. I'll throw up a link for a video I've done previously. If you've still got any specific questions, give me a shout. Yehuda Willer, hi Shaf, love your content. It's proper property advice, unlike most of the content on YouTube. Got a short and simple question. If you were investing £300,000 in a residential property, what would you say is the best LTV amount to do? Where it's safe but not stupid safe, where it produces a good income. Yehuda, 65%. I've already mentioned it in this video previously. Thank you for the feedback, really appreciate it. If you've got any more questions, just stick them in the comments below. Don Skinny Shaf, what do you think about Dan Pena? I've seen mixed opinions about him. Some call him the $1 trillion man, while others call him a scam. Don, I've never looked into him, to be honest with you. I've got no reason to look into him, so I can't really answer that for you. But I'm sure you can make up your own mind. You can do some due diligence. I've done it in my Samuel Leeds videos. And then just ask yourself the question, if this guy is a $1 trillion man, why is he selling courses? Craig Smith, great content again. We're looking for workshop premises and can move from where we are on a month's notice. We aim to grow the business, so looking bigger than 1,500 square feet. Have you any tips in this current climate? Craig, the whole market basically is going to be in turmoil in a few months' time. Landlords are going to have lots of vacant property, so landlords are going to be responsible for paying the vacant rates. Now, what you should be doing is you should be finding some buildings close to you that are suitable for you, then go and have a meeting with the landlord. And especially if they've got 2 or 3 vacant buildings in that industrial estate, and say to them, listen, I will insure it and I will pay your rates for the next year. What do you think? And the chances are that the landlord might say yes. I've done this in the past on a number of occasions where we've got a building and a charity's come up to us and said the building's been vacant for a period of time and they've said, can we take this off for you? We will pay the insurance and we'll pay the utilities and we'll give it to the charity. Once we've got a tenant, we'll give the charity notice and they'll leave. So I think this is a great basically opportunity for you to negotiate yourself a really good deal. John Boy 6993, Shaf, what would you say is a good return on rental property? I'm sitting at about 6%. John Boy, I think that's quite a good return, to be honest with you. I've got property which I get a 2% return on. It's residential property and we've bought it because it's a trophy asset, or we expect to get strong capital growth in it. At the other end of the spectrum, I've got commercial assets which we're getting a 20% return on. But for residential, that is quite a reasonable return. Benjamin Dale, please can you do a video on how to start a real estate investment fund similar to what Grant Cardone does? Benjamin, to be honest with you, I don't think many people would want to watch that. But listen, if you want to set up your own real estate fund similar to what Grant Cardone does, I know a good lawyer that I could advise you on that because I've done it in the past. Just leave a message below. James Teal, hi Shaf, thank you for all you're doing. What would you do if you were just starting out and had £20,000 to your name? I've been relatively successful with Amazon FBA, so I'm going to continue with that, but I'm unsure of my next steps. James, if you're making good money doing e-commerce, you need to expand that, okay, because you're obviously good at it. And that's what I do. If I find something that I'm good at, I basically do it again and again and again and again and again and again. And I think you're following the similar footsteps to me. I started off with a trading business and basically I made a lot of money doing trading. And then I applied the skills I learned in the trading business to property and I've made a lot of money doing property. So I think you're doing the right things. Just keep on doing what you're doing. If you've got any specific questions, please post them in the comments. Robert Jackson, you mentioned you've got a pre-approved facility enabling you to buy from an auction. Can you name a few banks, lenders that provide these? I've been using bridging finance for auction purchases previously, And as you probably know, it's a struggle to get them to complete within a 1 month deadline. Robert, we have a facility called an RCF. It's a revolving credit facility. We agree a predetermined amount of money. Anything we want to buy up to £1 million, we just send the bank an email and they drop that money into our account. If it's above £1 million, what we have to do is get a valuation on it, and it acts as a big overdraft. So it starts off at zero. Every time you draw down against it, it goes up. You sell something, it goes down. And the facility is for 5 years. Most high street lenders will be able to offer a facility like this, but the only thing is you need to have a bit of a track record to have a facility like this. What else did you say? That's it, that's all you asked me. So literally, that's what we have, but most high street banks will offer good facilities. So guys, that's the end of another Ask Shaf Live. Now, can I please ask you to do me a big favour? Can you leave me questions down below? Because if you don't leave me questions, I'll have nothing to answer in a couple of weeks' time. The other thing is, I need you to leave me a comment, leave me a like, because the more comments and the more likes that I get, the more this video will show up in the YouTube algorithm. I'm not charging you anything for doing this video. I'm not trying to sell you a course. So the very least you could do is please leave me a like, leave me a comment. Thank you very much. And if you haven't subscribed to my YouTube channel, please do so. Thanks. Stay safe, and I'll catch you next week. Thank you.